Greetings, everybody. Keith here. Hoping everybody's having a good day, enjoying life, living life, loving life. Want to remind
Good to
everybody.
see you're okay.
Yeah, we made it. We made it.
I was worried about you. I was going, oh man, that looks like it's heading your direction.
Yeah, I guess we had some that was kind of wicked. I thought we had one hit down north of us here towards Waverly, but I come to later find out it was Waverly, Nebraska. So
where are you guys? Like, if you look at the state, where are you located?
We're kind of just slightly northeast of central Iowa.
Okay.
They actually call it central Iowa, but we're just a little northeast of there.
Right on. Well, I'm glad to see you made it.
Absolutely. So I want to remind everybody, hit the like, share, and subscribe button. There's a PayPal link down below for anybody that wants to share some love. Always appreciated. And of course, StreamYard link is there for anybody who wants to join the panel. Today we're going to go over a video I did here a while back, prepaid expenses. There's John. How you doing tonight, John?
Doing good, Keith.
Good. So, as I've been explaining through here lately with the indemnification thing, if you want to seek equity, you must first come with equity. And if you want to expect things to be paid as a benefit, you got to come first and pay them. This is the principal concept of the true credit comes from the people. And we have to understand that. In order to understand that, we have to realize that they're using house chips in a gambling setup. If they want us to join, all we got to do is bring a greater value. It's not dollar for dollar. HJR 192 tells us they cannot demand that a party to a contract has to submit to that contract dollar for dollar. They have the ability to negotiate for a different value system. Today, the dollar for dollar is your definitive paper monies. The credit system is the unpaid balance of money or its equivalent. So the money system's equivalent is the credit system. And that's going to go back to the original documents, like it showed in the diplomatic video we did the other night. Grant and diplomatic. Grant is a promise. It's an assurance. It's saying that the information is true and correct. I promise what I'm saying is true and faithful. And the diplomatic is the part that expresses that we're coming forth with that knowledge as part of that grant because we have a knowing. We have a belief that this is a greater truth than that. And that's all we're doing is correcting the errors with a greater truth. I'm not the United States citizen, nor I'm the resident of the state. I'm the American that has an interest in it as the real party in interest, and that United States citizen and residency is a business operation, which I don't qualify. It's an inauthentic claim. But it comes with the faith and full faith and credit of the United States. That's the equality of bringing true and faithful words. That's where the true credit comes from. It's already prepaid if you know how to use the right words. So let's take a look at this.
So being that we're not on a physical money system, we're on credit, that to me looks like it's a higher standard of like integrity, clarity, and we don't really have that right now, you know.
Well, we do. It's just that people haven't been taught how to use it. Like I said in the video, the video I did earlier, I expressed the thing about the immigrants coming in, and when they come in and want to get that naturalization document, they have to pass a civics test. Now, that's for immigrants, but the naturalization process for the people that are born here, the Americans, that happens at birth. So how can you require a civics test when you give it to the people as a grant and then don't educate them? Who's got the greater advantage? The native people or the immigrants? Again, a sign of a weak nation. So let's get into it.
If you've ever seen the talk about the homemade stamps, I call them. It's actually a franking. It's the original term, franking, and it comes from a prepaid accounting.
And franking literally means the right to be first, the right to be a free man. That's what Franks originally professed themselves. Remember, it was a lingua franca, and that's a vehicular language. And the fact that lingua franca merely means that it came from the Frankish people, which were the first literal freemen, because they're the first ones that profess to be freemen in these modern ages. Again, it's just a repeat of history, where many people throughout time have professed to be free. Diogenes, a philosopher back in the day, that used to go out in public nude and philosophize and throw his philosophy at people. He believed he was that free that he could go out in public nude. He was a first freeman. That's literally what franking means: first in line, first in time. Again, the nation doesn't get any credit unless it's from the people who go forth as prophets unto the nations.
Practice, or principle, actually. And we're going to take a look at a short Instagram video before we get started on everything as it relates to the prepaid expenses, because it relates directly to such things as insurances and leases and things like that. So we're going to watch this Instagram video first, and it's just a short. I'm going to talk about some insurance workings as they relate to business.
And remember, in insurances, what do they want you to do? They want you to pay a premium, which is a payment up front. You make the first payment. It's already paid. So if it's a prepaid expense and you're making the first payment, where are they getting all of their profits? Again, even in that monetary system where they ask for premiums, you're making the payment.
Is that why it's pre-minimum?
I don't know if it would be pre-minute. Yeah, I see where you're going, but I would have to look into it. But yeah, it would seem MEUM could be a shortening of minimum.
Businesses and how they operate. And before we do that, I hope everybody will hit the like, share, and subscribe button for me. Help the algorithms and show your support. And of course, there's some PayPal links in the details section below for anybody that wants to share some love. And of course, the Instagram link that we're going to watch, there's a link down there for that, as well as the another resource video that we're going to talk about when we're done here. So let's get into it with Instagram on insurance.
Sued Jeff City. They sued his corporation.
They sure did.
And they sued his corporation and sued in her capacity as an employee. When you do that, it triggers commercial liability insurance. Yeah. And it triggers another policy called directors and officers. Okay. And we know he's a director of his companies as a CEO. So now you got two policies. What happens then is it takes away Puppy's ability to settle. It's not his choice no more.
So it's no longer personal accountability. It's his organization.
It's his organization. And it's no different than like if you hit somebody with your car. Let's say you have State Farm. State Farm gets to decide to settle, not you. You could say, I didn't run the stop sign. That's not true. They're lying. And State Farm says, we don't care. We did our investigation. We're settling. That's it. That's what happened here. So because they added those claims, the corporate insurance carrier got to say, read over it and say, oh, hell no, we giving her the money.
We're hearing you.
See, and that's what I'm saying is, when we get entered into these things without knowing what we're doing, we end up in a contract position where we contract away our right to settle, because as a contractor, that's a trustee position, a trustee capacity. And so we've given up the right of beneficiary, and the beneficiary is deemed to be the true owner, and the beneficiary is the one that can settle. So when you come in as a fictional entity, you can't settle. That's the trustee. That's the assignment. And you can't do it as assigned as a trustee. A trustee can't settle things. So you have to be able to throw that off and negate those contracts, void ab initio nunc pro tunc, because I never took upon that knowingly, intentionally, or willfully based on these things. I cannot, and therefore it's an inauthentic claim on my behalf. My apologies. I repent. Please forgive me. I'll never do it again.
Diddy's public reputation is done.
It's done.
Yeah.
And if he wants to be able to leave anything to his children, he needs to walk away from all of these corporations.
Damn, he can no longer be the head of his corporations.
Well, remember, didn't I say directors and officers liability?
Yeah.
More than likely, what will happen is those insurance companies, they have the ability to say, we won't renew your policy if he continues to be a director or officer.
That also goes to Texas Rule of Civil Procedure, Rule 12, that says you can't hire an attorney directly as the owner. It has to go through a board of directors. They're the ones that make all the decisions. The executive is only there for oversight and okaying of what's going on.
Okay,
Interesting.
so we're
See, that's
owners
the place you
in
put yourself
waiting.
in when you
Keith.
become a
Is
quote
that how
corporation.
I can
You
say
give
it?
up all
Say that again, John.
We're owners in waiting.
Right.
Or owners in training, but we're failing the test.
Yeah, owners in developmental stage, and they don't accept that. They placate that we're actually part of that office because of the way we've been signing. But again, that goes to that public education system that doesn't train us, and therefore it takes us till we're like 50 fucking years old to realize, wait a minute.
your powers to an insurance obligation that somebody else gets to settle. That's the problem with contracting under an operation of a trust. You never get to come in as a settler. This is the problem with all these administrative courts operating against people like myself that are obviously not corporate entities. Yet that's exactly what they're playing, is that shell game we just watched. You think you're the CEO of the company, but you give up all your control in that. First of all, I'll explain, according to the rules of procedure, you can't hire an attorney as a CEO. See, as a CEO of a corporation that's organized under the laws of the United States, you have to have certain communications with the Federal Reserve for that organizational entity to be a corporate, to operate in the corporation venue. Now, in that gives up all of your jurisdiction to the insurance claims. And like I explained there, if somebody comes after you for an insurance claim, you've already given that up because, again, as a CEO, you can't hire an attorney. According to the organizational laws of the United States, only a board of directors can hire an attorney. That means
And so in the board of directors, when you go into this insurance thing and buy an insurance, you're literally, what you're doing is you're assigning that insurance company as the board of directors over the estate in your private capacity. And that's just handing your estate over to a public entity.
an attorney can only represent corporate entities that are lawfully or legally organized under the laws of the United States. That means they have to have that corporate charter and the communications with the Federal Reserve in order to operate in the capacity of issuing and receiving payments.
And that's why I say when you go to court and they're converting that last name to a firm name, that's a corporate entity that you're not qualified for. You didn't know they were doing that converting, and they have to convert it into some kind of corporate entity in order to show that the court has authority. That's fraud. You have to give them, first duty in law is legal notice. Hey, I discovered that things haven't been being processed accordingly, and here's your notice. You can't do that anymore. That is improper and inappropriate. And had I known this information before, I'd have never been signing those documents. Now that I know, I can no longer do it because I know what you're doing on the other side. I cannot allow you to further convert the last name to a firm name and the Social Security number to an obligor number. I have to report you to the FBI for doing so.
That's in the commercial venue, the paperwork. That's why when you sign your name on a piece of paperwork, they're operating as if though you're a trustee of a corporate entity. And it's your corporate entity because it's in your name. So while we're on this, I want to explain that when you create your own corporation, and we see it all the time, you don't have to use your first and last name as already constructed as a legal name. And you don't have to use your given name or family name to construct a legal name. You can create your own legal name like Monopoly, like Nike, like Ma Bell. And you can change that name over time. This is how all of this commercial stuff works. You lose control in that commercial venue because you're giving it up to someone else. This is the entire presumption of the commercial system, is that the legal title, 1/10 of the law, which you have to register and then license through the state, lies with the state. And that legal title is referencing for entrance and control, whereas equitable title, which is 9/10 of the law, goes to possession and use.
And this is why I say it's being held in the wrong hands. They're not supposed to be holding it. That's prejudicial. That's prejudicial. Without prejudice. Without prejudice. And that's the removal. It's the transfer of title expenses incidental to the agency, to the United States, and to the United States Postal Service. They're the registered agent, and I believe that's who's supposed to hold that title. That title is supposed to be held by a private placement in escrow as an indemnification warrant and not to be sold. So you keep the warrant, which is the guarantee that what you say is true. My yea is my yea, my nay is my nay. I am not a United States citizen. I am not a resident. And those are this, this, and this. And I agree that it was given as a gift and blah, blah, blah. I will not use it. It will be merged in reconciliation with a new name. And that new name is where it's specially deposited with the United States Postal Service with my enterprise payment systems account under the trust. So it's recognized as trust property.
So in your possession and use of your own creation as a corporate entity, if you follow through the corporate scheme of the organized laws of public capacity and subject to that state registration and license, you now become an officer of the public. If you want to remain private, you have to create your own private irrevocable trust and then establish other revocable trusts within that, wherein you would create that legal entity as one trust, separate from all the others, so that if it gets destroyed, you can create another one while leaving the main trust untouched. This is the premise of private law versus public law. Private law is your trust, and it is, if it's done right, it's not breachable.
And so you have your main main revocable trust, and under that you have other trusts set up for Sally's college fund, Bobby's sports fund, whatever. And if at some point in time, heaven forbid, Bobby dies and you no longer have a need for the sports fund trust, you can collapse that and move those funds to a different trust or revert them back into the revocable trust.
But if you think you're creating a private corporation and then entering it into a public trust, you already destroyed your corporation. It wasn't founded in a good, solid base. So think about this stuff. And the next thing I want to look at is Investopedia again. And as I mentioned at the beginning of the video, we're talking about prepaid expense. So let's take a look at the prepaid expense according to Investopedia. So prepaid expense, definition and example. It says, what is a prepaid expense? A prepaid expense is an expense that has been paid for in advance, but not yet incurred. So like I said with the Instagram thing, we're talking about insurance. And we look at this first sentence under Investopedia, it tells us it's a prepaid expense. It is an expense that has been paid for in advance, but not yet incurred. Does that or does that not sound exactly like insurance? As we go down and read this, you will see that Investopedia clarifies, yes, it is just like insurance, leases, and various other things that we do in our normal everyday life, thinking that we're supposed to. So in a business, and again, notice it says in a business, and I am not a business, but yet in the performing or acting or looking like I'm doing the same thing, which is signing documents that we see officials sign. It is performing the functions of an official. So it's the performance of the functions of an official in a public venue is literally the same thing as performing the functions of public office while conducting your private trade or business. But that is not.
You're signing official documents, and that signature is taken as if though you were an official. And the information in it is warranted, true and correct. That's what warranted means. It's warranted information. It is true and correct. I assure you. I promise you. That's why when you sign that traffic citation, it's a promise to appear.
You can't do that. So it's merely just a presumption that you're acting privately in a public venue, but the paperwork says otherwise. Or excuse me, that's what the paper presents. When in fact, if you're truly in your private capacity, you wouldn't sign that document. You would know the private and public differences and know that any signature on that document should be nothing more than without recourse or benefactor, one or the other, as long as you know how to support them. If you're going to use without recourse, then it's done in a commercial capacity as a contractor, and you need to know contract law. If you're doing it as benefactor, then you need to know the support behind it as a trust and know how to assert yourself.
And now that we've done research on indemnification, it would be, without recourse by benefactor, and the without recourse wouldn't be for the commercial part of it, even though it would be in contract form. It would be for indemnification, not completion of contract or being paid as a contractor, but rather the other side of the surety, which is the indemnification. And that's why I say you hold the warrant, you don't sell it. That's the problem. When we sign those documents over, you're selling it as warranted information. That's what you're selling. You're selling the information, the data elements. When somebody comes with a purchase order, they are buying something with that purchase order. What are they buying? They'd like to buy the warrant so they can sell it. But if you don't sell the warrant, then they can't do anything but hold the bond. You can't sell bonds without warrants.
As a benefactor and stay out of the contract. So in a business, a prepaid expense is recorded as an asset. So when you pay your insurance, that's recorded as an asset, and you haven't gotten in an accident yet for anybody to make a claim on. And if you go through and nobody ever makes a claim on it, and no expenses incurred, then that asset still sits there. You paid into an insurance fund that never paid out, never gave you a benefit.
And so when mom goes to the hospital, she's got insurance, and that's a prepaid expense. First day of inpatient hospital treatment, She enters into a spell of illness, and then she has a baby who enters the world in its first day in inpatient hospital treatment, which is a spell of illness. And nobody corrects the title or the bond, and nothing is warranted. Mom signed that document as an informant and saying it was true and correct and didn't know the difference. If she had known the difference, I doubt she would have signed in that capacity.
So in business, a prepaid expense is recorded as an asset on the balance sheet that results from a business making advance payments for goods or services to be received in the future. So if you're paying on an insurance bond and you never take advantage of it, you never benefit from it, then where was the equal benefit? The only one that received benefit is the insurance company from your payment, which was done in fraud, particularly if you made monthly payments in Federal Reserve notes. Prepaid expenses are initially recorded as assets, but their value is expensed over time onto the income statement.
And so when Mom entered that document, that was an original financing document, and it's evidence of prepayment. It's what has the credit. It came from her, but that credit is faulty. It just needs to be fixed.
Unlike conventional expenses, the business will receive something of value from the prepaid expense over the course of several accounting periods. Again, if you're paying insurances and you never get in an accident and a claim is never made on that insurance, then you receive no benefit. It was a detriment to you all along. So I want to ask you, when you got that job and you paid insurance, when you end up having an accident on the job, and you end up out of work for a while because you get unemployment benefits. That's what this is talking over the course of several accounting periods. That would be like your unemployment benefits. However, they're expecting that you'll reach the age of 65, retire, and then use all those benefits. But we're going to find inconsistencies on how that works when we read further, because technically these are contractually for short term, like 1 year short terms, and not necessarily.
These are 1 year contracts, just like a lease for an apartment. You sign a 1 year contract based on 12 installment payments once a month. Installment means you're not stable. Literally.
So short that they're 1 month terms, like as in one monthly payments. Instead of making a full prepayment at the beginning of the year for the insurance, they talk you into an insurance installment plan. Then at the end of the year, they renew the agreement to continue those installment payments. Okay? So let's go down a little further. It says key takeaways in business accounting. And again, in business accounting, you as a corporate entity would have your own accounting to take care of. So if you don't have this accounting because you're not operating as a corporate entity, this is the way, or this is one of the things that you use to pierce the corporate veil. A prepaid expense is any good or service that has been paid for but not yet incurred. This is one of the takeaways they're talking about. It's not really all beneficial because, like I said, if you're paying insurance for a full year and you never get in an accident, there's no claim made on it, and therefore nobody takes any benefit except the insurance company. The insurance company is the sole entity that takes benefit from your monthly payments, and you don't get to benefit later on. Prepaid expenses are recorded on the balance sheet as an asset, most often as a current asset. Instead of a long-term asset, it's a current asset, which is usually only about a 1 year period.
See, and that's the problem. On their account, if you prepay on their account, it goes as a credit. Okay? That's the same thing as a prepaid as an asset. You gave them an asset. You got nothing in return at the end of 30 days, and they asked you for another asset.
You gave them the value. And basically that every check, I call them checks, every bill, other people call them bills, every bill you get in the mail, I don't care if it's insurance, if it's rent, anything, they are all dividend checks. They're worth money. They're not payments. They're actually payments to you, but we're not seen as the living man. We're seen as that guy's out to sea. So they're like, oh, well, they take that, give it to you, we pay it, and we don't sign it right, we don't handle it right, and we give that back to them, and they take that money and our dividend check and have a good old time with it, and we think we're without.
Yeah, it's
so I don't know if that helps you look at it any different, but
it's
all payments to us, dividends, money made. You gave your value anytime you sign your name on an official document, anything that has a stamp, a seal, anything like that. You're giving your value. I don't give a fuck what you think. You're giving your value. And whatever that value is for, payments, whatever, those people are investing that. Right?
Right.
It's
Right.
their
And
money.
what you're supposed to do, in my opinion, according to my research, is that if you take that remittance voucher and you make it a special deposit in the financial institution, it's known, it's 12 USC 1813 definition of deposit and 12 CFR 204.2 definition of deposit. They both say the same thing. The unpaid balance of money or its equivalent deposited in a financial institution that is given credit or is obligated to give credit. This is a special deposit of that remittance coupon so that you get credit. Customer agrees to make third-party payment as beneficiary so long as it's understood that credit is given to the customer's account. It is the unpaid balance of money or its equivalent that is to be returned to the beneficiary. Simple.
So,
Does
Keith,
everybody understand what he's saying?
under the SS5, how are they getting us to post a liability then?
Because you're presumed to be in the official capacity signing as a trustee as authorized by a co-trustee. Nobody's come forth as the beneficiary to claim the benefit, which was the document, the original document. Through diplomatic channels of notice, you give them notice that, hey, the beneficiary needs to be recognized. That's mine. It's got a seal on it for full faith and credit, showing that I have the right to have that credit returned to me.
You have to put yourself in the proper standing before any of this shit will work. You must
Right.
do that. And that's up to each individual. We keep on looking at this like, well, we're in this form, and how come this form and all this stuff? Once you get out of that, you back yourself out of it properly, send notice to people, get out of that system, then everything you won't be having insurance companies. You won't, these things don't exist anymore because you don't need them. You're self-insured.
Well, no, yeah, we won't, but the insurance
Yeah.
companies and stuff will still exist. But it's like I said in the
Yeah,
earlier
but we
video,
won't need them. You won't have to
right,
worry about anything
it'll
like that.
right, it'll be a downsizing because there'll be more and more people that won't need government, won't need insurance, won't need that stuff, and we'll be able to provide a greater oversight through the education because we're the ones doing it because we know how it's done. That's
Yeah,
the
and
premise. Again, the true benefit is the knowledge.
the world we're in is still going to exist right alongside of us. So
Yep,
we
we're
can
just
help
gonna.
those who want to be helped, like we're being helped now. But we're going to be parallel for a long while with this world that we're in right now talking about. So pulling
Yep.
out of it's a trick. Anyway.
And this next one is important.
Time, prepaid expenses are expensed onto the income statement. Let's take a look at this real quick because income statement is blue line highlighted.
Did you hear that? It said they're placed on the expense. Let's go back.
Insurance company is the sole entity that takes benefit from your monthly payments, and you don't get to benefit later on. Prepaid expenses are recorded on the balance sheet as an asset, most often as a current asset. Instead of a long-term asset, it's a current asset, which is usually only about a 1 year period. Over time, prepaid expenses are expensed onto the income statement. Let's take a look.
Prepaid expenses are expensed on the income statement. Are you making an income? There's a
Only
big
corporate-
difference there.
Only
Yep.
corporate entities, right?
Only corporate entities can make an income.
And they're not claiming
this,
it.
real
You're
quick.
claiming it.
Right. You're
We're
claiming to be an official of a corporate entity.
Yeah, backwards.
Because income statement is blue line highlighted. Okay, income statement. How to read it and use it. An income statement is one of 3 important financial statements used for reporting a company's financial performance over a specific accounting period. The other 2 key statements are the balance sheet and the cash flow statement. So if you don't have financial statements with a balance sheet and a cash flow statement, then you are obviously either violating the laws of a corporate entity under the United States as a corporate entity, or you are not a corporate entity.
Does that make sense? How many of you have a a financial statement so you can report your financial performance, and provide a balance sheet and a cash flow statement to prove it. If you don't have that, what are they bringing into court?
And require that of them in notice form. A change. Submit a change. A change is like a change. No, submit a change form. Form being then whatever the form is that you present to them, and whatever Keith just read, that's the form you demand from them. They won't be able to provide it. They're fucked.
Yep.
It ends all, and they won't try to provide it because it exposes all. They will just say,
Right.
"Oh, okay, whatever you need."
Right. It shows that the integrity of the record isn't there.
Our integrity is no because we
As a
record
corporate
our
entity, you're
record.
supposed to keep financial.
Well, that's why they're saying you don't have integrity, because you're missing the obvious.
Exactly. Isn't that a trip?
Statements, balance sheet, and cash flow statement. Now, the financial statement, balance sheet, and cash flow come after the initial asset being supported by a certified financial statement of intent. All of these things are required. If they're not there, then their presumption of you being a corporate entity are false, and the record.
And that's what's missing with Mom's informant signature. There's no statement of financial intent to fund anything, to finance anything. It came with no prior indemnification for any future settlements. It's not a valid trust document. However, when they issue a birth certificate with a full faith and credit, you accept it because you did put credits into the system. Your Social Security and FICA are known as insurance credits. Now, the system is also credited with other amounts known as unearned incomes, and of course, all the income and financing that you put into the system, otherwise, fines, fees, penalties, and such that you weren't supposed to, including all the taxes.
Record will show that. Again, the way you pierce the corporate veil is not that they're a corporation, but that you are not a corporation, and there is no record saying that you are. And yet, the only way that you can hire an attorney is to be a corporate entity with a board of directors that can then hire that attorney. Let's go back to the other one. Key takeaways. General accepted accounting principles stipulates that expenses should be recorded in the same period that the asset provides the benefit.
So, like I said, with the 30 days for the premium payment on that insurance installment plan, at the end of 30 days, if you didn't get a benefit, why are you paying them again? You're supposed to receive in equal exchange, equal consideration, a benefit in return.
So again, if you're making insurance payments on a monthly installment plan, what is the benefit? How are you compensated for a benefit at the end of that same period? They send you another fucking bill or statement, a billing statement. That's the problem. That's another one of those problems right there. Sending you a billing statement when it's already prepaid, and now they're asking you before you receive any benefit to make another prepayment.
So we find that we make that special deposit where they're supposed to forward those credits. That's payment. Except that you get to direct the credits where they're supposed to go, because if it's a investment and it's the owner that is investing, he is deemed to be the true beneficiary, because that's the only reason he would invest to begin with.
And they're depositing them where
For
they
the
need
following
to go
month.
when you give them back. So you're just taking their place. They're taking your place, basically.
Right. So you're just taking it back over.
Yep.
Exactly. You're
Exactly.
going to control it and settle it. And you're going to let them know that in that settlement, this is the way it's going to be from here on out.
I'll
So
be
you
collecting those dividends.
Yeah, and so therefore it's a settlement for the life estate. So that's as long as you're alive, that's the way it's going to work from now on.
This is a little bit different in lease agreements. However, there is still a disposition or displacement that happens behind the scenes that is still obfuscating things, and you shouldn't be signing that lease. Not as a tenant, not as a resident, not as a United States citizen, if those things are not what you are. Common prepaid expenses include insurance, lease office equipment, and that would be like premises that you rent to run a business, where you have an office in the public and providing public accommodation. And though you don't have an oath of office, you are operating and conducting yourself as if though you are performing the functions of a public office or your trade or business. Advertising, legal retainers, and estimated taxes. Now,
Now the estimated taxes, that's your Social Security and FICA again. They estimate those, right? That's why you fill out a 1040 at the end of the year or at the beginning of the year, so you can report that you made this much and this is how much you paid in taxes, and according to this, you're supposed to get this much back. You prepaid and you paid too much, and then in fact, what you did was you volunteered. Again, you're not required because you weren't deemed necessary by the board. You're not a resident.
When it comes to the advertising, I did a video a while back, a couple years ago, maybe longer, on the minimum listing agreement requirements. And they are simply a name and address. This is what,
And so you get duped into a state ID or driver's license, which is an advertisement to the officer when he asks for your ID to conduct business with you, because it's got a name and address. The minimum listing agreement required for being permitted to advertise that you're conducting business. So when you give them that ID, it's an advertisement that you're in the performance of business, trade or business.
what you see on business cards is a name and address. It's called a listing agreement. And that business card is an advertisement. That's as simple as it gets. You're giving everybody an
Common
advertisement and you
carrier,
put that on a
right, Keith?
fucking envelope. You're using a
Yes, a common carrier. And you never get paid. Funny how that works.
legal name with a principal place of business, an address that is an extension of the post office, another office, saying that you are running your principal place of business at home. Even if you don't have a business, the use of that address as a residential address, and particularly in the state of Iowa code under trust law, under the trust code, it says the resident determination is for income tax purposes. So you're duping yourself into paying income taxes by saying you're a resident without knowing that the only reason you would call yourself a resident in one of the states is that it is for income tax purposes. Whereas on the federal level, resident definition under 19 U.S.C. 81 lowercase o says no person shall reside within the zone, and zone being a foreign trade zone, again incorporating that term trade or business, except federal, state, or municipal officers or agents whose resident presence is deemed necessary by the board. The board being the Secretary of Commerce as the executive chair and the Secretary of Treasury. That's the capacity you're filling when you do these things under a presumption. So let's continue on. Understanding prepaid expenses. Companies make prepayments for goods or services such as leased office equipment or insurance coverage that provide continual benefits over time. Goods or services of this nature cannot be expensed immediately because the expense would not line up with the benefit incurred over time from using the asset. Due to the nature of certain goods and services, prepaid expenses will always exist. For example, insurance is a prepaid expense because the purpose of purchasing insurance is to buy proactive protection in case something unfortunate happens in the future.
So I want to ask, if a United States citizen is a internationally protected person by virtue of being a gift by the United States to the resident in the state, and it has American interests attached as according to the obligation of the United States to any debts, public or private, which includes all bonds, then why would they be making a charge against it? Isn't it already protected? Protection orders are given full faith and credit. The protection order is already there. They granted you a United States citizen as a nationality known as the United States business. Now, why would they provide an internationally protected person and then tell you you have to have insurance to protect? I find that an inconsistency and a violation of the very purpose and intent of granting of a nationality of a United States business in the interest of the United States. They wouldn't allow the states to make false claims against a United States entity. They must have its consent. They must be able to prove that the operator of that business violated the very protection laws, and therefore they have a right, due to general public concern and safety, to look into it.
But
That's
most
all.
people do violate it, you know. Most people violate it without
Not
knowledge. Still.
right. So it's not a violation. It's an unknowing and creates an accident. And remember, the very definition that they give for accident in the transportation code is continuous and repeated exposure to the same conditions that caused public liability, where the insured never expected nor intended.
Right. It's an accident, but doesn't thousands of people every day are getting millions actually. Because we don't listen, we don't research, we don't do these things. And so we're falling into their trap every time. And it's not they're doing it legally, we're just without knowledge of it.
Right,
We
and
call
once
them
we
all
have
these bad names and shit, but reality,
right,
they're
and
following
what
the playbook.
right, once we have the knowledge and we learn how that playbook is played and find out we're not even in the game, we're actually the owners that are up in the fucking big booth. We better start
Giving
screaming
all
over that.
value.
Yeah, we
Yeah.
better start screaming over those speakers our value.
Clearly, no insurance company would sell insurance that covers an unfortunate event after the fact. So insurance expenses must be prepaid by businesses. Must be prepaid by businesses. Again, if the state is requiring you to have insurance, they must prove that you are a business. Insurance is incurred by business. And if you're not performing business, then you are not required to have insurance.
They must have it.
Recording
We do
prepaid
not
expenses.
have it. We give
According
their
to generally
insurance
accepted
value.
accounting principles, expenses should be recorded in the same accounting period as the benefit generated.
Say that again.
They must have the insurance. We do not need insurance. We place the value on their insurance. That's why they're all bonded.
Yep.
It's because when they fuck up against us, they're like, oh well, we tried to get their birth certificate bond, their insurance, but now we screwed up on this little one. We got to pay out of their bond. We give their shit value on
Yep.
every level.
Yeah, we're the profit unto the nation. Absolutely.
From the related asset. I want to ask you one more time. How many times have you received a benefit after you paid your monthly insurance? If you did not get in an accident and you paid your monthly insurance and never received a benefit but got a billing statement in the mail saying they wanted you to make another prepayment, what happened to the prepayment from the first month?
See, if that prepaid expense is put on the ledger as the asset because it's an asset in form of material documentation or cash money or a check or money or whatever it is, that's that's what you're supposed to benefit from. Okay? In the insurance company benefiting from it, they're taking everything. They're acting as if though you're a business and therefore they're the board of directors, and that's a faulty contract. You don't have the capacity to provide insurance as a corporate entity if you're not actually a corporate entity.
How come that doesn't roll over as a prepayment for the next month as your benefit from not receiving a benefit because there was no claim made? Same thing with leases. For example, if a large copying machine is leased by a company for a period of 12 months, the company benefits from its use over the full time period. So if you put down a signature on an insurance document and pay every month, what is the asset and what is your benefit that you receive over the full time period? How come you're not recognizing the asset, making sure that it's recognized as the asset and being able to use it as credit?
See, everybody's giving that money as if though that's the asset. That's the asset they want because it's theirs. It's their obligation and other security in all forms of paper, whether it be a blank sheet of paper or one filled out with all kinds of nice green ink and 3 seals and da 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 da.
The asset is your signature on the
Let's go and look at that
document.
Yep. You're the one
On
that
anything.
you're the one that puts value into it. So if you see that document, like I said, if they've got a surety bond for $73 million, I'm going to double it. They give me a bill for $350, I'm going to double it. They put that bond out for failure to appear for jury duty, I'm going to double it. At least, minimum.
Real quick. What was that? 15 U.S.C. 1612. That's not it. What is that code? 1602? Yes, 1602. Let's take a look. 15 U.S. Code 1602, definitions and rules of construction. The term credit card means any card, plate, coupon book, and that's that billing statement. It comes to you with a coupon attached that they tell you to detach. Even though they don't call it coupon, it is in fact a coupon or other credit device. Other credit device. Now, let me ask you something, folks. Do you use a piece of paper with certain terms and conditions placed on it to obtain credit? Is that something, a device used to obtain credit. Now let's read the rest of it. It says existing for the purpose of obtaining money, property, labor, or services on credit.
So the piece of paper known as commercial paper, which is a negotiable instrument, you can put your value into it by showing them you are the credit. And you want to obtain money, property, labor, or services on that credit.
Where does the credit come from, folks? Again, is that your signature that puts the ball in motion? Because without your signature, it wouldn't roll. So where does the credit come from, folks? Do you think you're putting your signature on the paper and they're giving you credit? If that's so, how come it doesn't end up in an account for you? How come it is you have to pay in exchange? How come it is you're paying money in exchange for property, labor, or services? Think about this, folks. What is money? You keep flashing out these Federal Reserve notes. Let's take a look at that real quick, too. 12 U.S.C. 411. 12 U.S.C. 411, under issuance, remember we're talking about issues. When you issue a document to somebody and they sign it, you are the issuer. So when they issue to reserve banks, nature of obligation redemption, and it says clearly, folks, please pay attention to the plain writing. Federal Reserve notes to be issued at the discretion of the Board of Governors of the Federal Reserve System, not the Federal Reserve Board, not the Federal Reserve, the Federal Reserve System. Do you suppose that's the banking system? For the purpose of making advances to Federal Reserve banks. For the purpose of making advances to Federal Reserve banks. Does that sound like a prepayment? Through the Federal Reserve agents, as hereinafter set forth, and for no other purpose are authorized. So when you walk into that bank as part of the Federal Reserve system, and they hand you Federal Reserve notes, they are making an advance to or through a Federal Reserve agent. You are considered the Federal Reserve agent after having received them, and it is an advance to you, and then you take it and you give it to the landlord. Sweet prepayment in fraud. And
the next one I want to mention, it says the said notes shall be obligations of the United States and shall be receivable by all national and member banks and Federal Reserve banks, and for all taxes, customs, and other public dues. If they're saying it's due and owing and you owe it, then it's due and therefore it is public. You can't demand from the private. That's commingling funds.
fraud. See, if you're a banker and you don't know that you're only supposed to be using those Federal Reserve notes in a Federal Reserve system as advances to Federal Reserve banks through Federal Reserve agents and for no other purpose are allowed, why the fuck are you giving them out to everyday people knowing they are not a Federal Reserve agent?
And if they're the only ones that are allowed to handle them, and they're used to pay the customs, taxes, dues, public dues and other public dues, aren't they the ones that are supposed to be paying the insurance? See what I'm saying? Everything shows me inconsistent that we're not supposed to be touching those. Greetings, Sister Iman. How you doing tonight? All right. Well, we evidently don't have her yet. Sixth Estate AZ. What sort of rant is this fella on? You can think it's a rant all you want, but I'm taking the words directly from their codes and explaining how they're read, because most people think they understand English, and I assure you, you probably don't, just like I didn't either. I urge you to get back to the roots of the words, the origins, philology, etymology, concise English, and understand that you've been duped. I'm sure you're one of those nice young men that I call a bitch-ass slave. And understand, I too was a bitch-ass slave. But I'm pretty sure you got an ID in your wallet. The link's down there if you want to come up and discuss it. Feel free. In the meantime, we'll get back to it here. Because again, like I said, they're the ones that are supposed to be handling that stuff. They're the trustees in a public service of a public trust. They're the principals. They're the obligated party, and they are obligated to we the people, the beneficiaries, deemed to be true owners in equity. That's an expression of trust. So it's full circle. Public service is a public trust, and the surety companies prove that they are the principals.
Now you tell me again, how I'm wrong when in the plain writing it says you're not supposed to be touching those Federal Reserve notes. They're not for you to use. They're for advances. Advance of what? Kind of leaves it open, doesn't it? Oops. See, just because you know how to read or think you know how to read doesn't mean you know what's going on. And I guarantee you, when I talk about this to the bankers, and this is why I don't bank. When I talk about this to the bankers, and they say, "Well, what are you going to do?" You can point out to them that it's fraud, knowingly and intentionally doing so. What are you going to do? These fuckers are pricks, and they do know, in fact, what's going on if they're actual bankers. And I'll say it again: if you don't know how to bank, why are you handing your banking and financial affairs over to somebody that's going to do this to you?
And I'll reaffirm this, and I urge others to go ahead and do this as well. The next time you walk into the bank, you ask them about 12 U.S.C. 411 and why it is that they're giving you Federal Reserve notes when it says that they're not supposed to be used in that fashion at all, and for no other purpose are authorized. If I'm not a Federal Reserve agent, why are you handing me Federal Reserve notes?
A bank's just a pass-through. You just use the bank, and that's the private side of the bank. And there, believe me, there's a public and private side. But you just use them as a pass-through. Like I, if you find a way around it, let me know. But you have to have a TDA account, and they're like, you go there, they're like the pass-through form, and it's just documents at that point. You no longer use the note, the green dollars, the Federal Reserve notes. So
Right.
But you have to use a bank. They're passed through.
Right. You can't operate as a standalone bank. And that's why I said, and I can't remember which one I did, but I discussed the credit union. And that's the path I'm going to go, is the credit union, because again, that term credit union. And that means I'm not a standalone bank, and I'm operating as a trust company rather than a bank. And that trust company has beneficiaries, and it's only recognized as a company in contract form for its legal entity to be placed in private placement as relative to the private trust. It's not a public official. It can't be used in the public anymore. Therefore, it's a number in lieu of the name and address.
They blatantly know those Federal Reserve notes are for advances from Federal Reserve banks through Federal Reserve agents and for no other purpose. That is plain writing that a 7-year-old would understand. So let's get back to the Investopedia. Recording an advance payment.
And that's why I like that 12 U.S.C. 411 so well, because it is written, even though it's written by lawyers and stuff and it's written in legalese, it is pretty well easily comprehended that you really can't dismiss that fact that it says, and for no other purpose authorized, and that it's limited to Federal Reserve agents and no one else.
Made for the lease as an expense in the first month would not adequately match expenses with revenues generated from its use. Therefore, it should be recorded as prepaid expense and allocated to expenses over the full 12 months. So again, like I said, if you're in an insurance agreement and you make a monthly payment, at the end of the month you receive no benefit, then you clarify your benefit is to receive the money back so you can make another payment.
And this is what's wrong with that signature and everything. Like I said before, when we discussed endorsement, an endorsement is an amendment to an insurance policy. So everything is basically covered by an insurance policy when you use your name, that legal name, with the Social Security number, and anything that's derivative of that, such as the driver's license. It's a derivative of that very same information. And so what we're doing is we're creating a public liability through that insurance by amending it through our signature, because no one ever taught us how to qualify that signature as the beneficiary to make sure that they didn't include us in the contract, but recognized us as that third-party beneficiary.
This is called a credit device to obtain money, property, labor, or services on credit. What is that credit device? It's called legal tender. Today, definition is known as negotiable instruments. How do you negotiate an instrument? Or how do you know that you have an instrument that you can negotiate? It's because it has a place on there for you to put a signature. It is a negotiable instrument. All you have to do is know.
And a blank piece of paper can have a signature put on it. As long as you put the words that should go with it, coining your words or pursing your lips, you can create your own negotiable instruments, including promissory notes, international bills of exchange, this and that. It's a matter of your grant assuring them that what you say is true and correct, true and faithful, that you've been careful to maintain good work so that it doesn't cause harm. If you hand it to them and they see something that can cause somebody harm, then it's up to you to say either admit it or rebut it appropriately so you can continue on. It's negotiations. It's never set in stone.
Know how to put the right terms in it and let them know who you are. Journal entries, now we're talking about journal entries and not ledger entries. Journal entries that recognize expenses related to previously recorded prepaid expenses are called adjusting entries. So, just like I just said, if you make a payment for insurance, it goes by the first month, you prepaid, they're asking for another payment, then you should be able to adjust the entry, say, hey, I never received a benefit. So the negotiation here is that that payment that I already prepaid just gets adjusted and moves forward for the next accounting period.
It's like a rollover. See, it's not for investment. It's for private placement. And that private placement is merely a prepayment of indemnification. That's what we're working towards anyway. That's my concept.
It's that simple, folks. You have to learn how to negotiate by knowing how things work. They do not record new business transactions, but simply adjust previously recorded transactions. Adjusting entries for prepaid expenses is necessary to ensure that expenses are recognized in the period in which they occurred. So if the expenses...
And the adjustment is an amendment. You qualified an authorized representative signature, and they went ahead and made the adjustment. That's the amendment. They adjusted something. When you learn how to qualify that signature without recourse, they can't adjust anything because you relieve liability.
Aren't ever incurred, or excuse me, if the benefit never happens upon which the expense was incurred, your expense was the prepayment. You had to prepay it. That's an expense. You never received the benefit. So in exchange for not receiving the benefit, you adjust and recognize that the benefit was never received.
So your benefit is in releasing them of their liability. See, since you didn't have to pay out on the claim, I'm going to relieve you of your liability there. Relieving them of their liability relieves you of your original finance, your original funding. You settled the matters before they came about. And because you settled them and made a prepayment, good faith that you would continue paying after that if you got in an accident. You never got in an accident. Therefore, you never received a benefit in return. The benefit would be that if you got in an accident, they would pay the full amount of the claim because you paid the premium. Since that didn't happen, and then they want a premium from you. Where's my benefit in return?
Therefore, you adjust the entry as not a new business, but a continuation of the old business where you still haven't received your benefit, so you're going to reinstate the accounting period. You're not going to zero it out. You're going to keep it as the initial amount and just adjust it to a new accounting period. For example, assume ABC Company purchased insurance for the upcoming 12-month period. It pays $120,000 up front for the insurance policy. ABC Company will initially book the full $120 as a debit to prepaid insurance. So ABC Company is going to put it on their financial statement as a debit because they had to pay it out. It's a debit.
See what happens there? It's a prepaid expense, but it went as a debit instead of an asset. They're telling you right there they're not doing it right. They put it on their books as a debit, saying it cost them, that they had paid out. That's a false entry. It's supposed to be put on there as an asset.
An asset on the balance sheet and a credit to cash. In other words, that full year goes by, it sits there as a prepaid insurance as an asset. So at the end of the year, they can cash that asset.
Because you abandon it by not recognizing that they created a debit instead of an asset and are trying to charge you. Again, when you already gave the asset and they didn't accept it as an asset, they accepted it as a debit. Again, when you go to the store with that, even if you get a credit card and you go to the store, I think you come out with a receipt that says U.S. debit. Where's U.S. on that? It's got my name on it. It even says debit card. It's a MasterCard. It's supposed to be treated as credit, but they treat it as debit and give me a receipt that says U.S. debit. It doesn't say Keith Little debit. It says U.S. debit.
each month by the insurance company, an adjusting entry will be made to expense $10,000, 1/12 of the prepaid amount to the income statement through a credit to prepaid insurance and a debit to insurance expense.
So they put your $120 a month payment for insurance on there as a debit, and then the payout amount of $10,000 insurance claim as an asset. So they say they're sitting there with a $10,000 asset through a conversion rate that if they have to pay out, they have $10,000. They get that $10,000 through your credits. They're paying out from your estate. It's a credit system.
So when you make that insurance payment, guys, on your individual capacity, not as a corporation, the insurance company keeps it as an insurance credit. It's a debit to you. The insurance still has it as a credit to prepaid insurance and a debit to insurance expense, but they never incurred any expense. Therefore,
You're being treated as the surety as insured. That's what insurance means. You're undertaking the suretyship. They're the board of directors, the surety company that's going to pay out the claim on the principal. You're being held as the principal that's obligated to a beneficiary.
they received 100% of the benefit. You were 100% detriment and received no benefit. Okay. In the 12th month, the final 10,000 will be fully expensed, and the prepaid account will zero. Okay. This is what I'm talking about with those month-to-month payments. If you haven't received that benefit out of the insurance, then it shouldn't zero. Okay. There's nothing countering the credit. There's no debit. It's listed on a debit, but it's never been expensed. Leases for rents are a little bit different. You receive a benefit by using the space. That's one of.
But in that benefit, you're supposed to be acting for maintenance. Remember, we went over champerty and maintenance. So that's a lease agreement that says you're in maintenance. You're gonna be representing the suit for somebody. Whereas champerty is you provide the data elements and everything for the corrections of a suit. You don't sell it off to somebody else. You don't sell the information, the warranted information. You're in maintenance.
The assets. That's the asset that the landlord provides. Your asset is the signature still. Your asset will always be the signature. And remember, your asset as a signature will always go on financial instruments, legal instruments, negotiable instruments, and you have to be able to musically accord them for your own benefit. If you don't, it will be to your detriment. Is prepaid expense a current asset? Yes, prepaid expense is recorded as a current asset. Current assets are assets that a company plans to use or sell within a year. They are short-term assets. That's where you get that within a year. Use or sell within a year. So let's talk about that asset as it goes to the landlord. Like I said, the landlord's asset is the premises where you get to use. That is a lifelong asset, not a short-term asset, particularly if he's not planning on selling it, particularly if he's using it and intends to continue to use it for rent. I don't know why we're not sharing. I missed it. My apologies, folks.
See, it's the landlord that's actually supposed to be in maintenance. And then he contracts with you as a subcontractor, and now you taking care of the maintenance. That's the same thing with the utilities and water bills and everything. He's the primary billing party. He's the primary maintenance caretaker. And when they do these leases, they're handing all of those obligations over to you as if though you're a corporate entity that is allowed to do so. Principal place of business.
Within a year, they are short-term assets.
Residence, principal place of business.
So the landlord's asset is the home that he's renting or renting out to you. And your asset is the signature, and that's on a piece of paper. That piece of paper is actually the asset instrumentalized. And again, if you don't know the terms on it and you put it forth with your signature on it, you better be careful of what's on it. You better be knowing what you're doing when you sign these documents. So your asset, as it goes to a rental agreement, you get to use the asset of the landlord, which is the premises, the house, the living quarters, whatever it is. Your asset is the short-term asset that they consider the signature on the lease because that can be cut short.
Use it and get paid for it.
They can kick you out if you don't continue to make those payments.
Correct. You correct it as a matter of private placement, and in order to maintain the property, if the landlord wants to charge you $750 for rent, you charge him equally $750 for maintenance, but you double it for indemnification purposes, saying that if you do something wrong, here's an extra $750.
Again, you receive the asset in those situations. So you have to be very careful about those rental agreements and your position in them and learn not to contract in them but actually assert that you're the benefactor. You have no other way to acquire a home without using a credit device.
And when I say you have to be careful not to contract in them, even though you have to provide a contract form of indemnification, you're not contracting unless certain things come about, and you're only contracting as a matter of settlement at that time by prepaying it, by granting it, by assuring them this is a promise. Go ahead, sister.
I just have two comments, questions in the back I wanted you to look at. Thank you.
Is the maintenance in the lease to do or maintain the assets in a lease by the landlord right? Yes. It's his property. The premises are his property, and he's renting them to you, and you're supposed to maintain them in good order and not destroy them. And so that when the lease ends, and if you decide to move out, he can rent it to other people under the same conditions. So you're going to maintain the property in good shape. And it says the asset is the signature. How does one charge the landlord? By invoice? Yes. You give them an invoice for the maintenance. Tell you what, whatever maintenance you require me, I'll give equal consideration of $750 for both the maintenance and in champerty indemnification. You're covering your ass on both sides. That way it's already settled. See, it's being settled out of court before it even gets to anywhere to court. It's making a settlement that doesn't need a court action. If you want equity, you must first come with equity. If you want remedy, you must first bring the remedy.
And in that credit device, you have to be able to assert your ability to obtain the same thing equally that the rest of the population is afforded. You just have to learn a different way of doing it than them.
See these people?
They're doing it contractually. You can do it in a benefit way as a benefactor. Since the
You're
trust,
already giving them credit when you put your name on a piece of paper because your signature is your asset.
Yeah.
Right?
Yeah.
So listen, if they tell you you have to pay because in the Constitution it says under Article 1, Section 10, it says Congress is supposed to pay the bill. And if the Federal Reserve note that they call money in your pocket is only supposed to be used at the discretion of the governor and only in advancement for Federal Reserve agents, why they got us using funds we can't use is supposed to be internal.
Exactly. That's why I point out 12 U.S.C. 411. And again, I urge people to go around to the banks and ask them about this. Tell them you want to speak to the trustee and you want to ask them about 12 U.S.C. 411 because you're deeply concerned that you're being treated as a Federal Reserve agent in handling Federal Reserve notes, and you come to discover that you're not supposed to according to that language.
is already established. It will never end. As we read earlier, it's what is it? What did they say? Will never end. Will always prepaid expenses will always exist. Okay. So most often, this is where the prepaid expense line item is recorded. If any prepaid expense will not be used within the year, then it must be recorded as a long-term asset. So now we have that insurance thing that we were talking about earlier, say the auto insurance. You're paying auto insurance every month. And at the end of the year, you decide, okay, well, I want to stick with this insurance. It's pretty cheap. If you understand, if any prepaid expense will not be used within a year, then it must be recorded as a long-term asset. What's a long-term asset? It means it belongs long-term. It's will always exist. Simple. And we'll go over that long-term asset in another video. But that's effectively what I'm talking about is you're making payments every month. That the first month you make the payment, don't receive a benefit. That first month's payment should roll over. Okay.
And that's why I say the placement of that birth certificate bond with your indemnification agreement as a matter of private placement is that prepaid expense. It's placing an expense as an asset. Once it sits there for a certain amount of time, it becomes accredited.
Before we go any further, what I suggest is not get involved in insurances.
Pattern of practice. That's all it takes. And in an insurance, pattern of practice shows that you're willing to take upon the suretyship, so they're going to keep shoving it at you. When you realize that's the wrong way and you're supposed to be able to provide indemnification yourself, as a redeemer, Leviticus 25 verses 23 through 25, you realize the importance of having to gain the knowledge so you can do that. Because everything's being commingled in the private or in the public. It's supposed to be private, in my opinion, strong opinion.
I suggest you learn and research about surety bonds, because you can create your own surety bond just like an insurance bond and cover yourself. And it has to, of course, go through a insurance company, a bonding company. They are basically just writing the language for their benefit. Whereas if you do a surety bond and you know what you're doing, you can write your own surety bond that covers everything in your life.
And where I've realized that it's not actually you're creating a surety bond. The surety bond is already there. That's the birth certificate that you get from the Secretary of State that has the governor's signature and the registrar's signature with that seal that says there's full faith and credit in that document. So what is the full faith and credit? It's all values. It's a representative of value. Stamp or other representative of value. The seal is an other representative of value known as full faith and credit, not money.
It's so much cheaper because you can back your own surety bond with your own asset. And once it goes a year and it's never been expensed, it becomes a long-term asset. Okay? So again,
and that full faith and credit, again, as that surety, that's a United States business. Look at it. It's entitled. It's all uppercase name of a corporate entity that is entitled to the full faith and credit as a surety.
So we own
your
a
research.
surety company, Keith. Is that accurate or?
Essentially, yes. You use it's the name of the surety. When you're authorized as a representative and you give an unambiguous authorized signature without qualifying it, the unambiguous part of it is that you're obviously then signing in the official capacity rather than in a private capacity. Otherwise, you would have let them know you're the third-party beneficiary in your private capacity, expressing the trust.
Expand upon this. This is a very limited video, going over some very minimum things, but it's a basic concept that I think people need to understand about every piece of paper that you sign. There's an insurance behind it. I've said for many years now, this is all a big insurance scheme. Okay? Why do you think they don't teach you how to write your name grammatically correct in school? Why do you think it's so important that they teach a 5-year-old how to write their name in the legal context?
Actually, the card or some kind of credit device, Iman asks, one is not supposed to use any credit either or any card, right? And actually, the thing is that we are supposed to use credit. We're not supposed to be using money. All glory goes to him. We just have to show that the value is a greater value. Again, we are the redeemers. So we come by redeeming. Redeeming is a process of indemnification, which comes first. If you want equity, you must first come with equity. If you want redemption, you must first come with the redemption, knowing that you are already redeemed and that you are with the Redeemer, and that because of that, you have the power of redeeming.
And put it with an address. How much importance can it be that the child remember his address rather than the parent keeping him safe until he's able to go out on the world and know where he came from? It's just so backwards to me. So what is the difference between prepayment and prepaid? Prepayment and prepaid. Prepayment is the mentality of prepaying. Prepaid is the act that has already happened in that it was paid previously. The difference. Prepayments and prepaid expenses are different from one another. A prepayment means that you're just paying your bill earlier. In other words, you have an actual bill. Okay? You got a bill for an upcoming expense that you know is going to happen because you have a contract in play that says certain things are going to happen at certain times. And this expense is going to come here, and this expense is going to come here. This is why we do our own accounting at home as regards to our own finances when we have a house and we have insurances and we have a college fund and we have several automobiles, and we know that this automobile is going to have an oil change every so often. This other automobile has a different mileage count and doesn't get used as much, so its schedule is going to be different. So it's going to incur expenses at different times. This is all relative, and you have to learn how to do this. Otherwise, they're going to do it for you, and you're not going to receive the benefit you're supposed to benefit from as an equal consideration. For example, if you have a debt obligation such as a loan and you owe $1,000 next month, but decide to pay that amount this month, that is a prepayment.
That is a prepayment because you're admitting that you have a debt and that you're willing to pay it off in monthly payments.
Okay. The service of an insurance is to settle things for you if you get in an accident. If an accident never occurs, then the expense for them to settle for you is never incurred, and therefore you never receive a benefit. Okay? A prepaid expense, on the other hand, is any good or service that you paid for but have not used yet.
So your utilities that you pay for every month, but it's for the next month, it's prepaid. It's prepaid. You paid for it, but you haven't used it yet.
Okay? What are examples of prepaid expenses? Common examples of prepaid expenses include leases, rent, legal retainers, advertising costs, estimated taxes, insurance, salaries for all you folks in government occupations, and leased office equipment. The bottom line, prepaid expense is an accounting line item on a company's balance sheet that refers to goods and services that have been paid, been paid for, but not yet incurred. Recording prepaid expenses must be done correctly according to accounting standards. They are first recorded as an asset and then over time expensed onto the income statement. In other words, they are used up and it no longer becomes an asset, but it becomes an income onto the expensed income statement. In other words, that money gets recorded as an asset and then over time it's expensed onto the income statement. At the end of the month, the insurance company moves it onto their expensed income statement or whatever. I don't know where it goes. I don't see their income statement, so I can't say that for sure. But that's where they say it's supposed to go. But if there's no expense, then how could it be put on the expensed? Or
And remember, it said earlier that it's supposed to be ledgered as an asset, but they ledger it as a debit, and then they expense it at the end of the 12-month term. So they're expensing it on their income statement at the end of 12 months terms, but they're recognizing it as a debit, as a prepayment, rather than an asset as prepaid.
Expense onto the income statement. Okay? So once you understand these things and you realize the problems that we go through on this, I hope you understand that these businesses aren't operating for your benefit. They're operating for their own benefit, and they don't give a fuck. It isn't until somebody with the kahunas and the knowledge comes forth and rebuts this stuff that they say, well, what are you going to do about it? So the real thing that we're discussing here is that you really can't do anything about it except change yourself and how you operate in this world. You can't force them to do anything. They're going to do things the way they need to, according to their contract system, according to their Federal Reserve System, according to their banking system. It's not yours. You shouldn't be handing those things over for them to take care of for you until you learn how to do them first for yourself and then think, well, at least I know somebody I can trust and I can check up on him and keep an oversight on him. But to just blatantly hand your shit over to these people without any kind of real oversight is your own idiocy. I've realized that in my own activities in the last 50 years, or in the 50 years of my life as well. 18 to 50. So what, 32 years? It's quite astounding how dumb I've been my entire life. But again, like I said earlier, the public education system is the major problem. And like I said, there's a video I'm going to reference. There's a link to it in the details section below. But we're going to take a look at that here next. But before we do, I want to remind everybody, please hit that like, share, subscribe button. Help the algorithms, help support the channel, get the information out. And of course, there's PayPal links in the chats in the details section as well for anybody that wants to share some love. Every little bit is appreciated, and I could always certainly use it. So on to the next one. And this here, you are the one. That'll come clear a little bit. This is about a 2-hour video.
Hey, everybody.
Oops, let me find out that it's from the Truth.O.R. The Truth.O.R. Make sure we're getting, oops. There we go. The Truth.O.R. on YouTube. And we're going to be talking about, you are the one of my favorite topics, folks. As you know, I've been expanding upon the Postal Service for
Is the addenda or addendum an adjustable amendment for a lease by leasee? Yes. That's all you're doing is if you add something to it, it's an addendum or addenda, and it's amending what was prior. And you can do that to any contract, no matter what your position. And when you say by leasee, again, that's one of those terms that we need to correct because you're not, in fact, leasing it. You're involved in a international exchange, and because of certain terminology needing to be corrected, it's going to be a matter of education on those synonyms and what is a better term according to your choice of law. So your choice of law, if it's being spiritual, it would be a stranger and sojourner that is dwelling temporarily in this particular unit, something like that, you know. And that's the kind of things I do with my rent agreement. Amendment 1 is a definition of rental agreement means a credit agreement. So they understand that we're operating on a device intended, a credit device for the purpose of obtaining money, property, or services on credit. So, and that's one of those things I hope to be fixing here real soon.
Number of years. And when it comes to prepaid, I hope you check out this link. We're just going to check it out real quick. I've got to watch it myself. This is something I've already watched it. I've got to watch it repeatedly and continue taking notes to make sure that we are comprehending the same things, because this is the first time I've run across this guy and tends to agree with me. And I've never known of this guy. One of the very few people I've ever run across that sees the same concept, but has expanded upon it much greater than most anybody else. So let's watch this real short. It's a true.
And that's True Thor, Truthor, True Thor, one word on YouTube.
2-hour video, but we're just going to watch a short part of the introduction.
Hey everybody, how's it going? I'm going to do a really quick intro, okay? It's your buddy Thor. I want to give all the credit to Morpheus, Trinity, and Neo. These obviously they are their sort of screen names, online personas, but they compiled this video together, which is one of the most comprehensive videos I can find regarding the General Post Office and what the General Post Office is, and of course the judicial district. When you're doing registered mail, in order to do a court presentment, like I appeared in court, instead of appearing with my living body, I appear per presentment through registered mail. Registered mail is doing mail through, doing court through the mail system. So that's the best. Again, people should really start learning how to do their mail or their court through mail presentments. Okay, post office
mail presentments. And again, that's the court through the Postal Service under registered mail, which is insured. You're making a prepayment. Now they owe you a benefit. And it's the Postal Service that owes you that benefit.
Presentments. The Postal.
All warrants are supposed to go through the Postal Service. This is, again, according to the Royal Warrant Holders Association. They're holding documents that supposedly have warranted information. If you know there's information on there that isn't warranted, such as the fact that I've been claiming United States citizen and resident all my life, now that I know that's false, that means that information that I put in there is not warranted and it needs to be corrected. I'm the only one that can correct it. Therefore, I have a duty.
Service is a lot more than you think it is.
We should
And
get
there's a lot of
on a
information in that.
contract and express a trust or the trust.
Correct. Show that we've been signing in contract capacity, and now we know different. And now that we know different, we've studied to show ourselves worthy and approved beyond that diploma that we got in high school, and we can bring a greater truth in diplomacy. And that's merely just putting things straight.
National Mail Manual. So again, just real briefly, we have the post office that the American government is set up, and then along came the United States Postal.
So what? Maybe that was in the video.
Service on top of it that said, we'll take care of the post office business if you let us make money on the other stuff. What happened was they stopped teaching people how to use the post office and only teach you how to use the commercial system. Go back to.
And that's exactly right. Nobody ever discusses how to use the post office. And the post office, we should all know, is a post office, a bank, and a court. I urge you to do your research and find this stuff out. It is your judicial branch. It is where they make the judicial determinations. The Judicial Officer Department is an independent and neutral forum within the United States Postal Service and comprises of the judicial officer, the administrative law judge, and the Postal Service Board of Contract Appeals. This is where the contracts are regulated.
The de jure General Post Office. So for many people that have a lot of trouble taking action, not sure what do I do, how do I get started?
Yes,
this is
long-term
the best way
asset.
to begin to take action to be free. Start learning how to use the General Post Office. Now listen to how they explain you go through this process. I've already done it myself. Other people within my network have done it as well. And when we go to the postmaster and we have a one-on-one with them, you can get them to do their job. Okay, they're going to many times they're going to be resistant. They always are. The system is set up that way. They have dumbed down those workers as well. So I want everybody to just sit back and really, really absorb all the information. Know exactly what you're doing before you go do it. Okay. All right. If you have any questions, definitely.
Yeah, I already like this guy. Telling you the exact same thing I just got done telling you. You got to know what you're doing before you start doing this shit. And that they haven't taught us how to use the postal system. They've been teaching us the contract. They taught us how to write the legal name. They taught us how to write the address. They start doing this stuff at 5 years of age. And you help them because you too were indoctrinated in the same thing. Please.
And I'm going to urge you once again, do not believe me. Do not believe the neighbor. Do not believe the government, for crying out loud. Do not believe your mother. Don't believe John. Don't believe Robert. Just do your research so you know.
Stop.
Leave it in the comments and give it a like and share this with everybody. This is a way we can restore some of the freedom. Okay.
Absolutely. Please hit that like, share, and subscribe button. It's the only way. We have to learn how to communicate with each other, to show each other the things that we're learning that help us out in this stuff. Quit trying to shoot everybody down because you don't believe them. Do your research so you know.
Okay. All right. I look forward to your comments. I'll see you guys in a bit.
I, Morpheus, Neo, any other entity living man, practice law. No should anything said or given here because it's law or legal advice. We don't tell you to do anything. Always important to do your own research and be responsible for your own actions. Being a creditor, being a responsible individual. And everything said, shared, or emailed is for entertainment purposes only. Okay. So just give you a quick roadmap of what we're going to do in session 1. Do a little appreciation. Appreciate first off everybody who helped with this.
Now, I just want to make a comment here real quick that this guy certainly isn't doing the quote homemade postage stamp for the prepaid postage indicia, but he is using a payment system that the Postal Service recognizes. And again, I strongly suggest that you learn how to do this stuff. And again, this is
And it's a prepay system. The whole thing. Her Majesty's Royal Mail, tax per queue. It's all set up on franking, which is the right to be first. In other words, you get to make the payment first and then demand repayment. What do you think repayment's all about? They subrogated everything and they're demanding you to repay them. It's all backwards.
not just the only way to do it. This is just another way he's explaining it. As I've explained the prepaid postage indicia as quote homemade stamp. So please again pay attention.
I just lost my video and stuff, guys. I'm going to pause for a minute and come right back. I'll be right back, guys. Okay.
John Turner, and got me started on this whole rabbit hole search in the first place. We're going to do a little bit of researching. For some people that are new, what Morpheus is talking about is basically taking one particular item, word or subject, and just start following that definition after definition after definition. So we'll be doing that.
So again, concurring with my research, you need to look into the words. You need to learn the etymology. You need to go back to the definitions, find out what they're saying, so you get a better objective view of what's actually happening in all of these documentation paperworks.
If you're an experienced person, that I'm sure you know how much time that takes. All right, so we're going to also cover what says.
Yes, it's been 7 years so far.
That's because you're the one. How did you figure out that I could do this? Once again, because you are the one. And that'll come clear a little bit later when we talk about the lawful. How did I do it? We'll go through it step by step. So don't worry that if you don't get everything, you'll have access to this, and all the items that are necessary for the documents and things of that nature will be emailed to you at a later time. And the mechanics of this is actually very, very simple. And nobody on this phone call won't be able to handle mechanics. This is much easier than an administrative process for sure. The comprehension of it may be a little bit different, but we'll get to that in a second. And at the end, we'll finish up with a little appreciation and love for everybody. And
I'd like to say the same thing. You know, aside from spending 7 years in the etymology and all the research into everything, I too have come to find out it really is a rather simple process, and we are actually making too much of it. But again, that's not totally our fault. That's because we've been educated in doing so. We've been educated to look at certain things and remember certain things, and that's a delineation of our true self. It actually creates an aspect where we think of ourselves in person, and we stay in that character thinking we are the person, when in fact we are much.
It's a distraction of our reality, of spirituality.
Different. And that's the single most common fault that we have in this modern time, is that people don't know the difference between themselves and their person or their persons. You can have multiple persons. They have multiple characters. This is your character traits. Your emotions and things like that come out as different characters, different persons. So you have more than one person.
Let's move on. So what you should see on your screen right now is a sample from around the globe sent to an entity known as C.O.W.A.R.D.S over in Los Angeles, California. The upper left.
And just like we spoke of in the Investmentpedia definition, prepaid expense, it talked about prepaid taxes. What do you think tax per queue is? That's exactly what we're talking about, is prepaid expense. Okay.
One actually.
And when you understand the construction of the global postal trust services and how they are funded by the gross domestic product that is donated from each nation involved in the UN, then you understand the concept that it is in fact prepaid. That gross domestic product that they donated to that fund came from your sweat equity labor.
It's the credit of the people. That's what they record through the IMF. They don't keep money. They record the credits.
That's what prepays it. The gross domestic product. Where do you think that gross domestic product comes from? It's generated from? It's generated from the sweat equity labor of the backs of men.
Is from France. And you'll notice there's no actual stamp on it.
That is the true credit.
There, just the postmark of the post office. And you'll notice it says tax pursuit in the upper right-hand corner, UPU-RL 114.2.2, which is out of the UPU manual, which you can always Google for that one. Or I was going to include it on the email. There's like 90 meg or something like that, so you can just Google that.
And I want to mention to those folks out there wanting to do the research, remember, do not confuse the different manuals. There is a DMM, which is the domestic mail manual that the Postal Service will try to enforce, and that is the contract side. The UPU is the Universal International Mail Manual that he's talking about, the IMM, not the DMM, which is domestic mail manual, the International Mail Manual. If you're applying as the domestic mail manual, then you're part of that domestic entity. Again, you're being treated as a trustee as if though you're one of the contract officers of the domestic mailing system.
But then you have the bottom one is from Thailand. And also the person who's traveling around the world, somebody I met at MIT1, sent me one from India, where else is there? Japan, and a few other places. And pretty much did the same thing. One thing to note is, we'll cover this toward the end, is the return address on the bottom one and the top. You'll notice that it actually says Overseas California, non-domestic without the U.S. And that was dropped in a mailbox over in France or Thailand and England, and still got to Clark with no stamp. So it was all prepaid. They recognize it globally is the main point of that. Here's a couple more. Over on the left-hand side, note down, well, London.
Notice the one here on the right, that's a priority mail package directly from the post office. He's got a registered mail label on here. He's got a red stamp with his over his tax per queue thing with his signature, and then they've even got a barcode. These are security measures. Okay? It's a securitization of communication in proper form. Proper.
And that insurance is your benefit. It's a guarantee. Okay? That you
And-
that they will follow this value here, the prepayment, for everything that's inside, because it's a contract venue. Go ahead.
That's the security. What's in the envelope.
Yep. And this securitizes it. It's an international customs bond. That registered mail label is an international customs bond. Understand
Make
that.
sure your document has, whether it's your stamp, a barcode, the document is stamped and it matches because your value's on it.
Yep.
It can be worth whatever you want.
Professional person.
Interesting on that one. The only thing that we got noticed on that one is on the bottom, on the front, you'll notice that it has a little barcode down there, a little imprint. But other than that, there was no other markings from either post office in London or from the United States. Just using.
And this is the same thing that I have on my dispatch article that I like to show everybody, the trifold, the manifold dispatch article. It has one thing on it. You can see the squiggly lines where it went through the machine, but it didn't cancel any stamps. And all he did was put a pink. This one here has a black barcode at the bottom.
Chief,
The one I
I have a
have
question.
has an actual very light pink barcode. You can hardly see it.
Was that you?
Yeah, I have a question. And please, if I'm wrong, let me know. When you do it registered, at that point, don't you become the postmaster on it?
Yes. Yes.
And
That's
you invoke their attorney general, correct?
correct.
Under the UPU?
Yep. The director general.
Director general.
Yep.
Okay. Thank
And
you.
remember, this is Chancery. The Swiss franc is the weight and measure of their gold and silver. So on that measurement system, the Swiss Confederate is the one that provides the federal chancellor for equity for those other representatives of value. This is the merger of equity with common law, the merger of admiralty with maritime. And that's why we, at least me, in my perception, my research, if we want equity, we have to be willing to go all the way to the international forum. That means that's where equity resides. So in my research early on, I found out that's exactly where it is, because that's the only one in the world I know of that is named as a federal chancellor.
And we go in on our own value.
Yep.
As people call it burst tip, but as we are, full faith and credit. So
Right. And that's tied into give unto Caesar what belongs to Caesar by knowing the values. The gold and silver weights and measures in the physical materialistic world that we see so much represented by monies, whether it be paper money or national coins, coins of nations, is regulated as give unto Caesar what belongs to Caesar at that level. On the U.S. level, it's the reserve notes and that seal that represents full faith and credit. So all the nations, like I said, are operating on a credit system based on a chancellery weights and measures of materialistic gold and silver.
Mm-hmm.
But it is machine readable. And when I take it down to the post office to verify it, it says yes. It went through this machine on this day at this time, and it said it's valid. And nobody disputed it. Benefit is received upon the prepaid system.
In the tax, or once again, we'll be covering a few other things like that. I got somebody dialing in here. We just won't answer that. But the interesting thing is this has a label on the back that says Royal Mail. This one actually took approximately, I think it was about 2 months to get to it. But everything else.
That's another one. Instead of tax per Q, up in the right-hand corner where the stamp goes, you can put Her Majesty's Royal Mail. Because that's what we're talking about. It's Her Majesty's Postal Union.
And that's that Royal Warrant Holders Association. There are certain companies that provide contract goods and services to the royal houses. In those contract companies that provide those goods and services to the royal houses, they also provide those goods and services to other people other nations around the world. In those contracts, that's what they are. They're royal warrant holders. So they're taking up the warrants that you're selling. Quit selling them. Know what the warrant is. The warrant is the guarantee. Did you read this document? Do you, um, uh, under penalty, sign under penalty of perjury, professing that the above is true and accurate? If you don't know, then you shouldn't be signing. Say, hey, I have a question about this term right here. According to my knowledge, it says in the Iowa Code that resident determination is for income tax purposes. I don't have an income. I'm homeless. I'm applying for benefits. Oh, okay. It says that I'm supposed to be a United States citizen. How is a United States business homeless? I've got all kinds of good questions for them.
Understand this. The universal postal.
Oh, and another thing. We're talking about the receivership here too. When the Postal Service delivers this, the guy at the other end, the end of the line, the last mile, the final destination, the one intended to receive it and benefits from it, is the beneficiary. It fulfills its intent.
Union is Her Majesty's Postal Union. They work for the royal houses, contracting for goods and services for the royal houses.
I've got point A to point B within, usually even across the globe, somewhere around 4 to about 10 days. Pretty fast. The one on the right, we'll go into more detail at the end once again, is something that we send out, and it looks something like this. This one, if you look at the bottom, in the front, you'll notice it says Liverpool. I went ahead and crossed out the person's name, as you can see. But this one came from right above that. You can see it says from Santa Monica, California Republic. This is registered mail, as you can see, right above that. And up in the upper corner, we have a little tax pursuit label. It says INM 742.1 and 742.2, which we'll cover in a little bit. Got a little date, got a little stamp and seal there, signature. And the little red postmark, the round thing, it's a little hard to see, but that actually says Santa Monica, California. And the other interesting thing to note on that one is that extra registered mail stamp right there at the top. That one actually looks like the one that comes, they place it on there once it gets over to the other country on the registered.
So I hope you've enjoyed today's presentation. And again, I urge you, do not.
Okay. And just, it looks like we lost John. And just so I point out that manifold dispatch that I received with the prepaid stamp on it, I showed you they never canceled it or anything. That's diplomatic. That's different than these other things under registered mail and stuff, where it's a contract. It's known as a contract, so they put that cancellation on there. Those manifold dispatches, they can't do that because it's not a public contract. They know that. It's a prepaid expense. That comes from the beneficiary. And they know that because that's directly tied to that estate number. That's that number on the back of the Social Security card converted. Why would you think the Postal Service would know what that number means? Now they're going to profess they don't. I'm still having a hard time getting the local Postal Service to acknowledge that, but they're not acknowledging a lot of things. The guy out in New Hampshire, when I was doing it out there while I was in the Appalachian Mountains, he understood it. He did his research and said that was interesting. He never knew that. But that was one of the unique situations where we don't run across that very often. People in these public offices, they don't care. This guy, he seemed to be a true postman. He wanted some knowledge. He was interested. He said, well, let me check that out. He checked it out, sure enough, and he started letting me use the prepaid postage stamps. Get back to Waterloo? Nope, never heard of it.
Have they ever sent you to the shipping? I never really knew there was like two post offices in one. And they said, well, you need to talk to shipping department. And I was like, okay, where's that at? Like FedEx? And they said, no, pull around back where we receive shipments. And I was like, that's kind of weird. And there was a dock. And then next to that dock, there's stairs going up into an office. And it's a shipping office. And I said, well, who are the people? What's the difference? And I'm not talking about packages. And they said, well, they contract to us. And we're uniformed. That's what the guy in the shipping office told me. He goes, we're uniformed. And
yeah, they're international, and the uniform is domestic.
Yeah, it was so I really didn't realize there was two different. And a friend of mine at the same post office, he just retired. He was a postmaster, and I wish I would have known a lot of this because we went to school together. Um, Before he retired, because now he's like, fuck the post office. I just want to retire. Leave me alone. I don't want to hear it. I said, can I have your little book, your manual? He's like, I threw that away. I'm like, oh man. But
Yeah.
anyway, yeah, it's neat when you find a guy like you found in the Appalachians, a small town. It's beneficial to them that they know,
Yeah.
and it
Yeah.
helps us out a lot.
And evidently it didn't spread too far. I mean, it's not like he went out and started telling everybody, hey, that's how they make money is their stamps. That's
Yeah,
proprietary product, and it is known as money. They know it to be money. It's their money. It's called philatelic stamp
you know
collection.
how I have to look at this whole thing is, let's say State Farm Insurance. Anytime I sign anything, I open up my, let's say, birth certificate account, which basically that's what it is, and I invest in State Farm Insurance for my house or whatever. That's basically an investment, and every time they give me a bill, that's really my benefit, my dividend check. But they're taking the dividends, keeping them, and they're taking the check that I pay with and putting that in an account, abandonment, and I'm left out in the wind. Those guys, I found out, aren't claiming any of that money, and so
They
that's
can't.
how
Yeah,
you
they
can. No,
can't.
they can't. They can't. And that's how, if everybody went, I don't care what the company, if you went back and actually claimed that, handed them the form that they want you to fill out and it isn't a trip every year, all these places,
Yeah, and if your
per
mom and
month.
if your mom and dad didn't claim theirs, you have right to claim that as well as your grandparents.
Yeah. So if we claim those that money were our benefit, it would bankrupt them. It would shut so many of these big companies down
Yep.
because
And
all
John
it
John
wants.
says it. John says it perfectly. They convey your credits, but sell your signature because your signature is the guarantee that the information in the document is warranted, and that's what they're buying is the warranted
That's the money.
information, and that's not warranted though. It can't be if it's false. Oh,
That's what opens up their funding.
yep. So anyway, that brings us to the end. You got anything on the way out, Robert?
No, thank you very much. Appreciate it. I'm glad you're safe and your companion.
Yeah. Well, we got strings of storms coming through again. I'm going to be back at 9, but here every now and then I'm checking in on the radar, and so far we've been lucky.
Is it heading your way?
Oh yeah, we're going to be getting nailed all night.
Man, hang in there.
Yep. Absolutely. As well as everybody else, be safe out there, folks. This is the time of the year, and I think we're gonna probably see some major weather this spring all over the nation. Um, Unseasonably warm temperatures, higher amounts of rain, so be watching out for flooding. We already see a lot of flash flooding going on here locally within our own nation as well as outside in other nations around the world. We're seeing a lot more flash flooding and a lot more full-fledged flooding. So be careful
And
out
those
there.
tornadoes were weird. I've never seen tornadoes
Yeah, there were
spool up
over
and do
120.
so
Yeah,
many different.
there were over 120 tornadoes yesterday alone.
And we're a couple of them. I don't know if it was just the filming, but they looked like they were going the opposite way
Well,
of a
tornadoes.
tornado.
Well, tornadoes generally go counterclockwise.
Yeah, and
You've got
they had
a
some.
south wind that comes up. You got an east wind that comes over, and then when you've got a difference in temperature, it pulls that heat up. So now you've got all those currents conflicting against each other. It creates a toroidal current.
And it
That's our
looked
three.
like some were going clockwise yesterday. That's
That's
how I was
our
going.
three.
Those are backwards.
That's our three-dimensional world in the vortices of all winds and forces. Gravity, as they call it, however you want to look at that, that's toroidal. Water flowing down or going up is toroidal. Gas is toroidal. Your energy, your magnetic energy field, that's toroidal. Um,
The
so it's a three.
ether.
It's the three-dimensional world, things coming together in a three-dimensional world, which is just three directions. We think about a subjective and objective, but there's a third element in there somewhere.
Well, don't make sure that third element isn't you.
Well, I tend to think of it as
Stay safe.
truth, and I tend to think of it as truth, and we're getting closer and closer. And with that, folks, you know me, I love you, but I don't give a rat's ass whether you love me back. That's to say, I don't care if you hate me, I don't care if you don't respect me. That's on you. So may God bless you, and I'll be back at 9 o'clock with some more on the great LLC takeover. Had a guy this last Sunday night on the indemnification video talked about LLCs, and this is something I did here a while back. And when he said that, I remembered this video, and I totally agree with him 100%. So hopefully he'll be back tomorrow night. I'm going to be doing the second part on it, and we're going to just keep continuing on Sunday nights with the indemnification stuff. And then each week, I'm going to start reviewing some of the older videos that correlate it, so we can keep going on it with the indemnification as the final effect. So in the meantime, remember, may God bless you, and I'll see you at 9. Bye now.
Always make